Swayam Prabha. Digital India. Educated India.
Yogah Karmasu Kaushalam.
Banking Letters Part 2. Hello students, I am Dr. Rinki Menon, Assistant Professor presently working at Sri Narayana College of Commerce, Gujarat University. Today, I would be delivering a lecture in the subject of business communication. In today's lecture, we shall study on the topic of banking letters. The course objective. The course aims to make students understand the basic concepts of business communication and develop conceptual clarity and logical skills so that they can use them. Now, let's begin with today's module that we shall cover. After today's module, you will take a look at the different types of banking letters. So, to begin with, correspondence with banks is essential for organization. Banks are also business houses and they have to correspond with clients and customers. Banks, whether private or public, local or foreign, have to face stiff competition from others. Computerized accounts, automated teller machines, credit and debit cards have enlarged the scope of businesses. Banks, which were the monopoly of the rich men, today are attracting common and ordinary people. The whole competition of banking business has undergone a sea change. Banking correspondence is of a special nature because it deals with finance. Letters have to be carefully written to protect the interest of bank as well as the client. In the first place, it has to be very confidential in nature. The financial status of its clientele or client can be quite fluctuating owing to extraneous reasons. The interest of the client has to be protected as well as the interest of the bank. The correspondence should be tactful. A bank cannot afford to be judgmental in issues connected with the transactions of clients. Banks can suffer from bad debts, but it cannot afford to hastily call a client as a bad debtor. Courtesy is another important feature of banking correspondence. Banks should always look at situations from the receiver's point of view. The you attitude in letters is very important for all correspondence connected with the bank. Banking letters in business communication are formal written documents exchanged between individuals or entities in the context of banking transactions and financial matters. These letters serve various purposes including requesting information, providing instructions, confirming transactions, or addressing issues related to bank and finance. Here are some of the common types of banking letters and their purposes. Account opening letters, account closure letters, loan application letter, loan approval letter, credit reference letter, overdraft request letter, checkbook request letter, bank statement request letter, complaint letter, SWIFT or bank or wire transfer instruction letters. When drafting banking letters, it is essential to maintain a formal and professional tone, include accurate and complete information, adhere to any specific formatting requirements of the bank, and be clear and concise in your communication. Always proofread the letter before sending it. It ensures clarity and correctness. Now, let us take a look at the different types of letter, starting with the stop payment. During the course of a day, a company mails a large amount of checks and other instruments. If the payee reports that he has not received the instrument, it is advisable to convey the details to the bank promptly and to request it to stop the payment of the amount. Initial instruction may be given telephonically or telegraphically and a confirmatory copy sent later for their record. Though banks make all efforts to honor such instructions, they are not liable to compensate if the payment is made inadvertently. Now, Let us take a look at the example of stop payment letter. In the stop payment letters, it is very important to mention the account number and also the amount for which the check has been drawn. Immediate effects of the action to be taken like stop payment should be mentioned very clearly. Also mention in favor of whom the letter or the check has been withdrawn. Overdrafts. Companies are expected not to issue checks without sufficient balance in their accounts. Failure to do so may lead to dishonoring of the instrument and loss of reputation and goodwill. Banks routinely warn companies against overdrawn accounts and advise them to negotiate for a higher overdraft or OD limits. Here is an example of overdraft limits letter. Companies are allowed overdraft limits on payments of charges extra. These limits are negotiable on the basis of fixed and liquid assets like plant and machinery, buildings, securities, and even goodwill. Normally, overdraft arrangements are secured against stocks, raw material, finished goods, and trading stocks of the borrower. Temporary overdrafts are also allowed and in certain circumstances without any security also. Temporary overdrafts help companies cope up with immediate problems. Applications must be supported by relevant documents. In the body of overdraft limit letters, it is very important to mention why you are taking for an additional temporary overdraft limit and what is the reason and how it shall be returned for what period of time. Term loan. Fixed term loans are usually secured against fixed assets such as plant and machinery, land and building, etc. Most of the information is furnished by filling up forms made available by the bank. In the event of a delay, a letter may be dispatched. Example of delay in sanction of term loan. Status inquiry letters. Parties often ask for credit and give the name of their banker as referee. It is common for companies to secure the help of their own bankers to find out the creditworthiness of those parties. Bankers make such information available to the clients in confidence but without accepting any liability. Here's an example of the same. Letter to a bank requesting credit facility. A credit facility in a banking context refers to an arrangement or agreement between the financial institution such as a bank and a customer that allows the customer to borrow funds up to a certain limit. It is a form of a financial support that provides the customer with access to predetermined amount of money for various purposes such as working capital, business expansion or personal expenses. Here are some common types of credit facilities offered by the banks: credit cards, personal loans, overdraft facilities, lines of credit, business loans. Credit facilities are subject to terms and conditions set by the financial institution or bank, including interest rates, repayment terms, and any other associated fees. The approval of a credit facility is often based on the borrower's creditworthiness, financial stability, and the purpose for which the funds are going to be used. It's important for the borrowers to carefully review the terms of any credit facility and understand their obligations before entering into such agreements with the bank. Letter to the bank requesting credit facility example. Letter to bank requesting current account statement. A current account statement letter to a bank typically refers to a return request by the account holder to obtain a detailed summary of transaction and the current status of their current account. The current account statement is a comprehensive record that includes information about deposits, withdrawals, transfers, and other transactions that have occurred within a specified period. Example of a letter to a bank requesting the current account statement. Letter to the bank requesting bank guarantee. Letter to a bank asking for higher credit limits. A letter to a bank asking for higher credit limit is a formal written request from a bank or a credit card holder or borrower to the bank seeking an increase in the maximum amount of credit that they are allowed. This type of request is common for credit cards, line of credit and other credit facilities. The example of letter to bank asking for higher credit limits. Banks nowadays, apart from the usual operating, the bank accounts, giving numerous services, that is collection of checks, retirement of bills, phishing banks, etc. A business person writes banking letters also to utilize the different kinds of services provided by the banks. Effective communication is crucial in the banking sector due to its impact on various aspects of the industry. In summary, communication is the backbone of the banking sector, influencing customer relations, compliance, risk management, and overall operational efficiency. Clear, transparent, and timely communication not only meets customer expectation but also strengthens the reputation and trustworthiness of banks in the financial market. Banking letters play a crucial role in maintaining transparency and trust between banks and the clients in business. These letters serve as formal means of communication, providing information, updates and documentation related to various banking transactions and services. Proactively informing customers about changes ensures transparency. Clearly stating the reasons behind changes and their impacts help customers understand the context and adapt to modification, fostering trust in the bank's commitment to keep them informed. Transparency in legal matters, including regulatory compliance, ensures that customers are aware of their rights and responsibilities. This open communication contributes to trust by demonstrating the bank's commitment to operating within the legal framework. In essence, banking letters act as a tangible and documented format of communication that helps establish and maintain transparency, trust in the financial relationship between businesses and banks. These letters contribute to confidence, provide clarity and reinforce the integrity of the banking institutions. Thank you.